This is one of those episodes I've been thinking about for a long time. I have my good friend Kyle Green here, and we have some big news to announce. Welcome to the Mortgage Broker Podcast, tailor-made for Canadian mortgage industry professionals. Proudly presented by A Better Way Mortgage Group, this podcast is your trusted source for insider insights, market updates, and strategies to elevate your career in the ever-evolving world of mortgage brokering. Whether you're a seasoned broker with A Better Way Mortgage Group or an industry enthusiast looking to stay ahead, our episodes are designed to empower you with the knowledge and tools you need to excel in the Canadian mortgage space. Welcome back to the Mortgage Broker Podcast. Today, I'm joined by Kyle Green, a good friend of mine, one of the top brokers in Canada for many years, and really excited to share some news with you today, but more importantly, get into Kyle's background because I think it's one of the most impressive and interesting mortgage broker backgrounds that I've come across, and really looking forward to diving into it. So Kyle, welcome to the show.
Yeah, happy to be here. I noticed you were in green today too, hey bud?
Yeah, that's definitely on purpose.
Good color, yeah.
All right, man. So, we've been working towards a potential partnership for many years, and we'll touch on that shortly. But I really just want to start with your career. It's certainly an impressive one. I mean, we've had so many conversations over the years, and I've always been amazed at just the types of deals you look at and somehow get done. And that's always been probably one of the most intriguing parts of your career that I've found is just the ability to get deals done with 12 properties or, just some of the crazy stuff you see.
Yeah.
And so I do want to get into that, but maybe just starting with your origin story, like, no pun intended.
Yeah.
But,
yeah, I know, right? Yeah.
But yeah, just kind of maybe starting from square one. Like I didn't actually know this until I did some research on you, believe it or not. You did work at Westminster Savings.
Yeah.
Yeah.
Yep.
So maybe starting there and like,
here
we are.
In college, I was a supervisor at Tim Hortons, and I had a bad day one day when my boss short-staffed me, gave me a whole bunch of trainees, and I had to call a bunch of people to help out. And then eventually I went up the chain and called my manager to come, like, I need some help, come in. And she was pissed. She was not happy about it. And she gave me a lot of grief over that. And eventually I'm like, what am I doing here? Like, I shouldn't be doing this. And it just so happened that like a couple of days earlier, I was talking to my accounting 201 teacher. And for some reason it came up, what his brother did. And somehow it was, he's got a yacht, he's got a Porsche, he's got this. And I'm like, so what does your brother do? Stockbroker. I'm like, well, I think I know what I'm going to be. I'm going to be a stockbroker. This is back in early 2006, by the way. So, stock market, real estate, everything was popping. So then I started, and I was just turning 19, so I was still 18 years old at this time. I start going online and applying to like all of the banking jobs and all of the financial planning jobs and all that kind of stuff. Applied to, it must have been like 120 places. Edward Jones, everything. And they're looking at this kid that's going to Douglas College, by the way. I was not a smart enough kid. I was like a C average student in high school because I didn't like to do homework. And I don't think they really thought much of me. And what ended up happening is eventually I got a job at Westminster Savings Credit Union, and I was like so excited about that. I just turned 19, like, 2 days before I got the job or 2 days after or something like that. Right away, like first day on the job. So what do you do when you're not busy? Oh, well, we kind of just sit here, surf the net. I'm like, okay, interesting. And then you start to look at, the public information about people's pay grids because it was a unionized environment at Westminster Savings Credit Union. And then I'm like, wait a second, I'm going to be here like 10 years and then I can make 55 grand a year. Like, this is not what I thought I was getting into. I thought it was going to be like a, stockbroker, mad money, Kramer, like, sell, right? This is not what I expected. So I was talking to a friend of mine on MSN Messenger.
Wait, what's that?
Yeah. Yeah, I know, right?
Dating ourselves.
Yeah, 100%. I know. Yeah. When you talk about that, like, and let's not bring up like ICQ, the one before that, right? Yeah. So chatting with a friend of mine, and then she said, well, my parents are looking for some help doing some boring paperwork stuff, she said. I'm like, okay, what do they do? Mortgage brokers? I'm like, oh, is that like kind of like a realtor? She's like, yeah, pretty much. I'm like, okay. So for context, her parents owned what was called Meridian Mortgage Services, and back in the day, back in 2006, they were neck and neck with DLC in funded volume. They had like 25 franchises, mostly in BC, and close to $1 billion a year in funded volume at that time.
So that would have been what year?
2006.
Okay.
Yeah. Here I am going to apply for this job. The two older daughters of my friend, they both work for the parents. And then here's the rebellious partying daughter who I'm friends with, who says, yeah, my friend wants a job. I don't think they really thought much of it. So I show up in like my Moors suit, get the job. But me and the owners hit it off right away. And I actually became their protege. So
cool.
like right away, they're giving me commercial deals when I was
wow.
I was still 19 at the time. Right. So I come in there, they're giving me all these crazy tough deals. So I started in November of 2006. This is being recorded in April of 2026. So this November, I'll be doing this for 20 years.
Wow.
But long story short, the progression from there is pretty quick. So started working with them as their assistant, started doing deals, complicated ones. They would just give me whatever, like, oh, Kyle, figure out this commercial deal. Okay. In May of 2009, they told me, hey, Kyle, I think it's time for you I think you're ready to fly out of the nest. And for perspective, this was like the heart of the subprime crisis. Like, it was insane back then. I didn't think I was ready. But luckily, something that led up to this moment really helped me a lot, because one of the franchise owners of the 25 franchises was a guy named Ozzy Durock, who's a real estate guru in Vancouver. And he had this investment group, and they would meet once a month, and they'd have these semi-annual events and whatnot. And so me and the two daughters of the owners would go there, because Ozzy used to have a mortgage broker that was running the show, and then that mortgage broker quit because he's like, oh, these deals are too complicated, etc. So me and the two daughters would show up, and the two older daughters weren't really keen on being there. They're like, oh, I have to go to this thing every first Monday of the month or whatever it was. And for me, it was like, this is it. This is connecting that mortgage, business that I've been learning with that investor mindset that I always had, right? So that connection really helped. And I think looking back, people, money, and numbers has always been like three things that I've really been good at and really enjoyed. And so right away, I connected with Ozzy Durock. We're starting to do that. And then when I went off my own, I kind of negotiated something with my ex-bosses at the time. I said, well, your daughters don't really want to do this thing. Well, how about I just take that and run with it, and I'll like push it. I'll make it work, and I'll give you guys a cut and everything. And that's kind of what kickstarted my career in a big way.
Interesting.
Yeah.
Wow. I mean, that's pretty cool to be able to just jump right in, especially with mentors. We talk about this all the time, like how important a mentor is, and clearly that was the role that they played for you. Like how important was that at that time of your career, and that really made you comfortable to, make the leap outside of their nest, quote unquote? I
mean, back in those days, they were processing 30 deals a month.
Wow.
Right? So, and you're getting involved in all of that.
Yeah.
And you've got people that were realtors before and then had been brokers and like did a lot of business and were willing to like my office was in the owner of this brokerage's office for a period of time. Like I was sitting right next to him.
So like you're listening on those conversations, you're hearing everything, how they speak, like, what the lingo is. And I think that's really important. And, a lot of mentors in the industry that I've worked with, like that's how I learned, was just from osmosis.
Yeah. If I was like, if tomorrow I was going to become a realtor, I would figure, okay, which office am I going to? Who goes to the office every day? Can I get a desk as close to that top producer as possible? I just want to hear all their little things, because you're going to pick up all these little sayings, right?
Yeah.
Like as a broker now doing it for 20 years, like objection handling is like just second nature. There's like this objection equals this response. And then you get to like even tack on like, oh, for this type of person, it's this response. For that type of person, is that response, right? But you learn all these like quick little tools. You just pull your tool belt, but you don't have that until you kind of learn it from other people and then start to use them yourself.
Yeah, those are the reps, right?
Yeah.
One thing, so you mentioned Ozzy, and like that would have been your path into the RAIN side of things. Like maybe touch on that and like how important that was. And like, again, that's probably where a lot of these challenging deals started to pop up.
Yeah, so I'm working at the head office, starting to do these Ozzy Durock deals and starting to do a lot of complex, like this client's got 3 rental properties, this one has 5, this one has 12, whatever. And back in the day, it was a lot easier. You could just throw shit at a wall and it would usually stick. So it was a lot easier of an environment to learn in than it is today. But learning all those deals, what ended up happening is I'd go to like trade shows that Aussie Jurok would put on, and I'd be standing there. I'm like 20 years old or 21 years old, and some people would actually ask me the question like, so why should I go with you? Like, you're obviously a really young kid. You don't have a lot of experience. Like, and I have a baby face too, like a 20-year-old with a baby face. Like, you know what I mean? Like, that's rough. But then I could actually tell them, well, I do more rental property mortgages than most people that have been brokering for 10 years. And I've done that in only like 1 year or 2 years. So I actually have more experience. And I could legitimately say this because brokers in our brokerage network started to call me, because I worked at head office, like, hey, got this complicated deal. And then my boss, Randy, at the time was like, well, call Kyle. He does a lot of this stuff. And so then I'm literally helping brokers at 20 years old package up their rental property deals, because I'm like, oh, do this, do that. It ends up being like something that I really enjoyed too, with like finding a way of putting that complex puzzle together and getting it figured out. And there's a lot of like, there's a basic structure to it. And once you understand the math of how underwriting works, you get to learn how to tweak it and do this and do that to like make a deal fit that it doesn't otherwise fit. And one of the cool stories that I have very early in my career, so I think I'm 21 at this time. So I'm going to the trade shows and I have a booth. 21-year-old kid, getting asked like, oh, why should I use you for my mortgage? But one day, Aussie Jurok comes to me and he says, Kyle, the other mortgage broker didn't show up. I'm going to need you to speak at 1:30. I'm like, okay, I don't have a PowerPoint. I have like nothing. There's 600 people at this conference. Yeah. We're like, what do we do? Okay. Well, so during the lunch break, what he did is before the lunch break, he said, hey, anybody that wants to ask mortgage questions, write them down on a piece of paper and put them in this jar. And then during lunch, he's like, while he's eating, he's like, tell me what questions I could ask to like as filler if we don't have enough questions in the jar. So we did a Q&A style, and I got up there for 45 minutes and did Q&A. Nailed it.
Oh, that's awesome.
And had people come up to me at the front of the stage asking me questions, and I was like, you got to get out of here. You got to get out of here. Like, I had people following me back to my booth. I was swamped. I got like 5 times the leads at that event than I did the one before. And then I was like, Ozzy asked me, he's like, how are you feeling after the event and whatnot? I'm like, oh, the butterflies are gone, which is a complete lie, by the way. Complete lie. But then I realized, I'm like, this public speaking thing, what's one of the best ways of building trust, which in my opinion, and as a mortgage broker, the number one thing you're trying to do is build trust with the client. And what's one of the easiest and best ways to build trust is to be an expert. And when you get on stage, like, you instantly gain credibility.
Absolutely.
Right. And so the public speaking thing became my thing, actually, and doing events. And then it was like Rain and Keyspire and REAG and all these different events. And then I just owned the real estate investor network. Me and another good friend of mine, Dave Butler, basically are like the 2 kings of rentals in the whole country. You know?
Yeah, that's a great example. Actually, he's back east, and that's definitely his thing for sure. Yeah, you guys are very similar in that sense, and he has a similar story too about getting in front of those networks and those groups, and so with that you get a lot of reps from one, public speaking, and that's a big piece, is just continuing to do it, because the butterflies are even there still to this day. For me, it's in some cases, and I never had anywhere near the amount of experience you did, but just the reps make you more comfortable and learn how to harness that nervousness, I guess you could say. But to your point, the credibility that you built through that years of doing that, it is trust building in every sense. One thing just with the deals, because this is kind of back to the reps that you would see there, is like these are people that are buying multiple properties, continuing to grow their wealth in real estate. You mentioned to me years ago about like a joint venture deal that was pretty like shocking to hear for the first time. Like, is that something you'd be willing to share, and just how that came together? Yeah,
I mean, which deal are you talking about?
Well, it was, you had 0 down.
Yeah, the very first deal I did. Yeah, so I'm going to these investor conferences and meetings and whatnot, and I'm looking at this and like, well, I should be doing a deal too. And so I started by creating a spreadsheet actually for myself to understand looking at the return on investment and how to evaluate different types of deals. So I built a spreadsheet for myself. It looked like crap, but it did the work. And then I actually realized that most of my clients didn't have any tool to use. So I built it and just made it like more user friendly and fancier. That actually became a massive marketing channel for me, by the way, because what ended up happening is when I'd go on stage and speak, I would say, hey, by the way, I've got this awesome cash flow analysis spreadsheet. You should come to the booth and get it. I just need your email. And then I go to these things that speak in front of like 500 or 600 people, and I get 100 to 200 emails every time I do it. My database grew to 1,000 people within like 1 year. It was insane. Like I just grew it and grew it and grew it. Maybe even, I think it was actually more than 1,000 people, but like it grew really fast. So using that spreadsheet, now I also become an expert where I'm finding and I'm able to find numbers like, oh, this type of property and this type of market cash flows really, really well. So actually that joint venture deal I did when I was 21 was a fourplex with a carriage house in Kelowna. They wanted 1.4 for it. I negotiated. I got it down to 1.15 million.
Wow.
Yeah. The gross rents on that were $7,600 a month for the property, and I was able to find a joint venture partner to put up all the cash. In fact, I did a refi for the guy's down payment plus the mortgage on the purchase. I actually made money doing 2 mortgages to do this deal. Yeah.
Wow.
And I was a joint venture partner on that property, which is crazy. And then I won like the joint venture of the year award with Aussie Duroc and stuff like that. So it was a really cool experience at a young age.
And I mean, back to building trust, like you can actually now talk the talk because you're doing it, which is a huge piece. And I just want to touch on that cash flow statement because that's like what we've been focused on our whole career is like giving value before transaction, right? Yep. And like you're now giving something of, immense value before trying to sell them to do something with you or whatever your service is. And I think for like any mortgage broker listening, like that, it doesn't have to be a cash flow spreadsheet. It could be anything of value, like just trying to give that value, whether it's an educational component or, a tool or a resource, like that's a huge piece. And clearly it works. And every time I hear that, a story of somebody giving something away, it always pays dividends.
Yep.
So kind of transitioning. So like becoming the broker who gets deals done, like clearly we kind of set the stage of like where this experience came from, but that is really that's your brand.
Yeah.
Is you're the guy that just gets these deals done. And, you mentioned back from when you were 20 years old, brokers were calling you for support. And that's just continued to follow you. And I gather that's a passion now and why you rep that brand. So maybe just chatting about that and what that looks like, over the course of your career, but now today.
The art of getting the deal done was fascinating to me. And we all have boxes that we have to fit the deals into. But then when you start to dive into the math and really get it, you start to learn all these little tricks. So as an example, you realize, hey, if I've got a bunch of rental properties, if I have a lender that's using a rental offset on the non-subject rentals, what happens if you have a surplus? Then that surplus gets added to the income, but then you look at debt servicing, they only use like 44% of that income. So you actually water down a surplus in any rental property. So that's a little trick that I started to learn. Like, wait, I can actually put a $200,000 mortgage against this rental here, and it only lowers the amount that I can get on the other subject property by $100,000. Like I've created $100,000 of money out of thin air by like fiddling around with the numbers and then learning, oh, this client has a large rental shortfall in their portfolio, but this lender deducts that from the income. So they're only using 44% of that shortfall versus another lender is using 100% of it. Like, so you learn all these little tricks where like you can identify these things up front. But what ended up happening is when you do such complicated deals, you become somebody that just gets a lot of calls. Like realtors know that you're a guy like, okay, maybe you're not my primary, but like I got a deal that's falling apart. Can you save this? Can you jump in? Can you get it done? The investor community, big time, they're just like somebody that gets it. Self-employed clients are like, oh my God, somebody that gets it. Like you speak my language. The banker doesn't speak my language, but you do. And they're more like get it done sensitive than they are rate sensitive, Yeah. So especially in this climate, I've found that being a broker that focuses on that type of business has been really good for our book. And because you don't compete as much, your value proposition is not rate, you know?
Yeah, I was just going to say, like, to get out of the rate game. I mean, that's a big thing we've been pushing for, especially the last 18 months, is just the competitive nature of the banks that we're working with in our channel and external. We all know the names, and, you know, the challenge of trying to battle with a 15 basis point difference in some cases. Like, you're really built your reputation on the structure, like structuring the file and how is this going to get done? And self-employed clients, like, all of them are in a rush. Mm-hmm. You know, they want everything now, and they want it done right. And that's really what you're selling with structure.
Big time. Yeah. I mean, literally a conversation I had with the client yesterday. They didn't want to send me all their financials. They have like 3 different companies that are interconnected. They want to buy in a company name, but they never sent me the financials for the holding company during the pre-approval stage. So I'm like, okay, you know, did get them a pre-approval for them to buy a place in Whistler, and then they finally like write an offer, and then finally it's like, okay, so the documents we've been following up for a long time, we need them. They send them in. It's like, well, that's not a holding company. Well, what do you mean? Okay, well, now like you're diving into that, and then, oh, well, this operating company that you've been getting paid from, it's running at a loss. Like, I wish we knew that in the pre-approval stage. But then you dive into like, what percentage ownership do you have? Oh, you less than 20%. I bet you I can position you as an employee instead of self-employed now. But I told the client straight up, like, I'm the broker. You send me everything. Don't expect that you are the gatekeeper of what information is sent. I'm not the bank where you just send the information and now it's like, oh, now that I've seen it, I can't do it. You got to trust me. You got to send me everything. Now I know where the landmines are, and I know where to step and where not to step.
Yeah.
But I had that conversation with the guy that's like very successful and makes a lot more money than I do. But it's like, man, you got to just trust me and my team that you got to send me everything, and then I can map it out. And I think you're fine here because I've got the path figured out. But it would have been easier if you just sent me the stuff we asked for, you know?
Yeah, no doubt. And like, I think, it's kind of segues into, you know, you have these brokers calling you for this type of information. They know you get these deals done. You have a passion for sharing this type of education, like on preparing a client for these types of situations. How have you found that parlayed into Expressway, which is your underwriting model, which we're going to get into? And one, there's the educating of the broker to have this educational approach with the client, but, you know, just more so the process, the system behind every single deal.
Yeah. So there's 2 things to unpack there, which is underwriting in general, and underwriting centers and underwriting processes and systems. And then there's the training component of it. So on the training side of it, first and foremost, my marketing strategy, which I highly recommend to brokers, is a educational-based marketing approach where you're just educating customers for free, giving them value, and then becoming an expert in that specific field. So ideally, when we train a new broker to come into the industry, we say, what does your current client base look like? The people that you already know. What do you want your future customer base to look like? What's a good match for you? Like, investors were a good match for me because I can go toe to toe with an engineer and talk numbers and go detailed into it. And maybe for other mortgage brokers, like, I don't like engineers. Like, a lot of brokers literally say, like, I hate engineers. They ask why. They have like 10 questions. But also an engineer, when they get an answer to all those 10 questions that they find satisfactory, they're like, finally somebody that gets it, right? So I connect with those. Yeah. But I don't really connect with the first-time homebuyers a lot because I'm like, why are you being so emotional? You know, I'm going to get it done. Don't worry about it, right? Like, it's just, that's my nature. So you attract and repel different types of people. So an educational-based marketing approach helps with that. And so the onboarding and start off with for a new broker and the training is all based on, like, what is your opportunity within your current client base, and then what is the direction you want to focus on, and then you direct and create an approach where you proactively try to find more people that are going to be best aligned with you and see value in what you have to offer, right? Yeah. And really focus on that. And so that's where, for me, working with so many investors ended up kind of twisting the business a little bit into, like, so much of what I talk about now is tax. You know, client that just sold his business for $8 million. He's like, oh yeah, I need a mortgage on the property. I'm like, well, what if you bought it with cash and we just get you a line of credit? Which, by the way, I'm talking myself out of commission at this point. Yeah. But like, I literally ran the numbers, and it's top of mind because I just had the conversation yesterday. Like, if you do this, what I'm telling you to do, you're going to save $26,000 a year in taxes. Like, does the rate matter? The rate does not matter at all. Yeah. This guy, he could walk into any one bank and I will lose on rate immediately. So it's not about that at this point. It's more about can I add value? And this is a third time client. He's going to come back again because I just told him how to save 26 grand, right? So that educational piece is key for me. And I think that then looking at on the education side, the tough part about being a new broker is there is so much to learn. I can't teach you how to have that conversation day one, right? So, for me, looking at growing our brokerage, and we're going to get to why we connected too in a few minutes, but growing the brokerage, my plan was, okay, I think that brokers need more training and double down on the training, but then you have to really make sure that the training is on an as needed basis. You can't tell everybody and teach everybody from a fire hose, like, here's all the data and information right
100%.
away.
Yeah, I couldn't agree more. And like, I think it's a good segue, and we'll come back to the underwriting model in a big way. But like, you may not remember this, but the first time we actually met, I was actually at a Rennie event in the Italian Cultural Center, and you had a booth set up.
Oh my God, yeah. I didn't really remember that was the first time we met.
Yeah, this
Holy
is going
shit.
way back. So I would have been a
yeah.
broker for maybe a year or two, and I was just trying to go to any event or what, it wasn't about necessarily building my network. It was more building my knowledge because I didn't have any background, and you were set up with a booth, and I was like, oh wow, you could set up booths at a place like this. I did no idea.
Yeah.
But yeah, so that's where we met, and just kind of to our parallel journeys in a way. I connected with you right away and knew you're knowledgeable just by the way you were talking, and the fact that you were set up with a professional setup. That it was inspiring. But more so, like, our relationship kind of built from there. And, we did kind of run a bit of a parallel journey, especially in the early days where, I was brokering. I had maybe one staff. I think you had a few staff members. And, at that time, and even to this day, a lot of brokers are just independent, running their, one-man show operations. And I was always like, okay, there's a better way to do this from a scale perspective.
No pun intended.
Yeah, true.
Yeah.
I say that a lot, but don't even notice it. Yeah. But yeah, like I just knew like there has to be another option here than it just being me as the single like cog in the wheel and, always being the bottleneck. And it was really hard to build a process when we didn't really have a process. And yeah, so we started to kind of connect it early on. And we actually had a mastermind group at a point in time where other brokers in similar spots to us, friends in the industry, were also trying to scale, build a process. And we kind of went through that journey together and both built pretty big operations from a team perspective, and just ultimately taking the role of a mortgage broker and building a business around it with specific roles and duties and tasks that would happen the same way every single time. And yeah, maybe just kind of touch on that, because that's a big part of your success with Green Mortgage Team, your book of business, and just how important like an actual process was.
Yeah, so I mean, I always had okay processes, but my skill set as I was getting good at brokering was getting the deals done. And then what I found is that, me and Dustin Woodhouse was another good friend of mine too, and every year, both of us were kind of like topping out around like 100 million. And I was there for a couple of years, like 3 years or so. And like, just hard to break through that. And the problem is that without a process or system, every single decision may need to flow through you. And then you become the bottleneck, and then you cannot grow past a certain point.
Yeah.
And that's the problem. And when you're in my opinion, when you're at about the 30 to maybe you can push it up to about 50 million, in that range, you have to make a decision. You either stay there, or to go through and break through that barrier, you have to take some time off of doing deals and stop answering the phone and work on the weekends or whatever. You have to build your own system or plug into an already existing system. But you must have a system where team members on your team know exactly what is expected of them at every single stage of the process, because then they are autonomously performing the work without you having to oversight. And I see this all the time with some of the brokers in our brokerage or brokers out there. A lot of us are A-type personalities. We love perfection.
Yeah.
You cannot have perfection with this system, by the way, but you can perfect the system as much as possible. And every issue that comes up is a system issue now. Like very earlier in our system, we had a situation where, oh my God, the underwriter forgot to order an appraisal. We got the deal approved Friday afternoon. We're like, great, awesome. And they're like, we didn't order an appraisal. what the F, right? Like,
Yeah.
so sure, I think a lot of people would say, underwriter, what the hell are you doing? You're an idiot. My perspective on that is it's a system problem, not a human problem. I should be building a system where, as we changed this right after that, you submit the deal in the system, automatically, boom, task pops up, order appraisal.
Yeah.
That's,
We've had the exact same experience.
right?
Yeah.
Exact same.
Yeah.
So then you're like, okay, everything's a system problem now. And
Yeah.
then you focus on building a system and enhancing that all the time. But then you also have like our roles and our methods is very similar to the way that you guys built yours. And I went all the way from having one person take the deal front to back to having 4 people involved in every single transaction, and then settle at 3. So there's the account manager, who's basically the broker. There's the document manager, and then the underwriter.
Yeah.
And those 3 people work interconnectedly. And then as they hand the deal back and forth, there's note templates on making sure that the next people in line know exactly what they need to do. And all of that is a really well-oiled machine to like take it through. But like, it allows me to be here doing a podcast and deals are happening. And I don't have to get involved. I'm the jet fuel, but I'm not a key component in the transaction. Things will happen without me.
Yeah, and I mean, yeah, it's the exact same system and process that we built verbatim, and again, it's like it's also the right people in the right roles, right? Like there's certain people that are, really good with, like, I always use like the bedside manner, like they're good with calming a client down, the emotional client, like the high touch moments, where like the underwriter behind the scenes is like the way they speak, the lingo they talk would scare most people away, right? Because of they're used to speaking direct to another underwriter, right? So just having the right personalities and the right roles, and we talk about that so much, within our perfect loan process and just all the training that we do. And I know you're the same way. The one thing that really stuck out for me, it's like just following your journey. It's almost like we followed you in a way, and it almost seemed like we were just copying your moves, but we were doing a lot of this stuff simultaneously, working together in the mastermind. But we got to a point, we've talked about this on our podcast in many times, where we hit that ceiling of like the same $100 million thing, and we got to build a team. But then the next ceiling was a substantial amount of volume with a really good team, making good money, and we're realizing it's not enough volume to get all the lender access and all the other things that we needed to run our business. And we were we were a franchise with Mortgage Architects at the time. No team members, like, other than the people that worked for us. And I was like, I do not want to do more deals. Mm-hmm. Like, I don't want to hire more people. Like, we have a great thing going here, but now we're getting cut off by a certain lender because we haven't done enough business with them. And that was like, holy smoke. So, we never wanted to bring on brokers under our brand, because that was our brand. We had the system, the process, same as Green, right? Yep. Like, you had your way of doing things. It didn't make sense to add an independent broker under that brand that was going to run with a different experience. So we were always reluctant to, let alone recruit. We were literally telling friends that wanted to join us, like, no, this doesn't make sense. Like, you should go join XYZ. Mm-hmm. So that's when we made the decision, okay, we need to bring on brokers, but we got to build another brand. So we built another brand that, existed for maybe 6 months. And it was literally just to recruit a couple buddies that could pump up the volume and get these lender access issues dealt with, and moved on. And so we did that. And I think we added like 3 or 4 brokers. It helped a substantial amount with the volume, but still starting to realize it wasn't enough, which was like shocking. But Derek and I talked about this a lot. We started to realize, like, whoa, we actually like this side of the business. This is pretty neat. So we went to an owner's university, DLCG Owners University, and I never went to one of those before because I wasn't an owner. I was just a broker. And they're sitting there talking about recruitment, talking about all these things that we never heard, Gary and the leadership team talk about, because we never went to them, right? Mm-hmm. And then I remember bumping into you in the lobby, and you're like, yeah, I just bought Origin. I'm like, what?
Yeah.
Why? And then I started to realize, like, oh my gosh, like, this is what I need to do, because I'm sitting there like inspired of how much I'm liking what I'm hearing. It's going to take me forever to go recruit enough volume to remove my income from brokering. So I was like, and I realized, like, I might have to pick one, but that's not going to be possible. So what is the next step? Maybe we just acquire, and you had just acquired Origin at that time. So maybe just walk us through that. And like, did you have, like, where did that idea even come from?
Yeah, interesting. So, Yeah, I love the idea that you guys got into a better way and and became much larger than Origin is or was. And I love the fact that we can put it on the record that the idea may have come from me.
It did.
Let it be known. Let it be known.
A quick break from the show, and before we get back into it, I want to tell you about something I'm really proud of. We've just launched a free 5-part webinar series through Mortgage Masters Canada. If you're a mortgage broker in Canada and you've ever felt like you're doing everything yourself, working nights, working weekends, and still can't seem to break through to the next level, this series was built for you. It's called the Canadian Perfect Loan Process. It's the exact system that Derek Williamson and I used to scale our book of business to $500 million in just 1 year. And we're giving it away completely free. 5 sessions, real systems, lead generation, outreach, tech stack delegation, alternative lending, no fluff, no sales pitch, just the playbook. The series is running right now. Sessions are every 2 weeks, so there's still time to jump in and catch the next one live. Head to mortgagemasters.ca. That's mortgagemasters.ca and register. It takes 10 seconds. Your name and your email, and you're in for all 5 sessions. All right, let's get back to it.
I had already co-owned the small brokerage with the people that got me started in the brokering industry. So there's a certain point as a broker, you're like, oh, I'm doing a lot of deals. And then people are trying to recruit you and you're going to all these meetings and they're like, oh, I should get a better split. And eventually the way that they kept me was, hey, you just become an owner. So we were owning it together, 50-50. But at the time that brokerage was only 20 of us. And me and my business partner and their book was like 80 to 85% of the funded volume. And here's the problem, and this is probably exactly what you guys are running into in this small phase. You either stay in the black cash flow wise and do all of the brokering BS yourself, right? But then it cannibalizes your personal book of business and your origination book. Or you decide to go in the red and you say, well, I'm going to hire the people, I'm going to do this, I'm going to do that. I'm going to lose money on the brokerage side until I reach the scale, at which point it finally financially makes sense. So there was some talk about like, maybe I should be looking at buying another book of business. And I started to think maybe I should buy out my business partners and that kind of stuff. So interestingly, we were having an onboarding meeting with Velocity. This was back in like early 2021. And I was talking to Kevin Deere there and we're going through it. And I had some frustrations because I was trying to get all of our brokerage to onboard Velocity and go through that. And then there's a couple things where eventually my business partners and I just wanted to build it differently. They kind of wanted to be like, hey, let's just charge the brokers like $195 a month, $195 a deal. And I'm like, that doesn't work with me though. Like my value proposition is like, I'm going to help you get your tough deals done. I'm going to like get in there and get my hands dirty, but that's like a high value, high cost, or at least high value, mid cost approach, different business model. And it didn't work with the way that they wanted to run it. Cause they were like, hey, let's just let the brokers be here and just, they can park their license and we'll just ramp up the brokers. Right. It didn't really work in line with me. So then there was like, I actually had approached them to buy them out. And at some point, I'd kind of brought this up with Kevin Deere when we were talking about Velocity onboarding stuff. He's okay, yeah, interesting. And then later he calls me back that afternoon. He's like, hey, Kyle, are you alone? I'm like, what's the next question? What am I wearing? Like, what are you asking me for, right? Kevin, you sneaky guy. And he's like, well, I'm calling you because we're actually looking at selling Origin. So Velocity for them was really taking off.
Yeah.
They were connected now. They had like Gary Morris with DLC involved and all that kind of stuff. So they were like ramping that up. And I think they didn't really have time for Origin. I think it also became a bit of a conflict of interest because they're like trying to onboard brokers outside of the DLC group of companies. And it's like, well, you're a broker owner. Are you going to steal my information? All that kind of stuff. Yeah. So it made sense for them to kind of look at selling. And I was a very interested buyer because, what that problem we were talking about earlier, it's like if I just plug into an already existing scale, I'm not going to run it in the red, and I also don't have to do all the things. I just buy it, plug in 1 or 2 people, and then it kind of runs, and I get to do more of what I'm good at.
Yeah.
Does it actually work that way? No.
Yeah.
And this is where you and I started to talk more, but like that was the whole idea behind buying a brokerage, to be honest. Yeah.
That's cool. And it's like, we looked, when we made that decision, we're going to buy, we had hung our license at a Better Way for many years, and it was so well run, and the owners didn't broker, and we didn't really. We actually thought that was a negative at the time when we were there because they didn't know how to do deals, but they ran such a good business because that's all they did. Their focus was the broker, and they truly made brokers feel like that was their number one priority because it was. And then we left for no other reason than we were growing a different initiative and trying to build something and wanted to network with brokers. This was back in our private lending days, and when we made the decision to look to buy, and you had said you bought Origin, I was like, wow, because like if I was going to actually start looking, like that would have been one of the ones, because Jeff Willis and Kevin Deere were such good operators and good business owners, and that's, I mean, hence why Velocity's had so much success. Like they founded it and built a solid operation around it. And then, we started to look at all these other franchises and groups outside of the DLCG, and it's like people that I literally thought were my mentors, and you start to look behind the curtain and the financials, and like, holy smokes, these are all so poorly run, like really, really poorly run. And it was very eye-opening, and it ultimately led us back to a Better Way to negotiate the deal we have today. And they were not looking to sell. Like I attacked them to buy it, and it took a lot of back and forth with Lecky Chan, one of the former owners. I went back and forth with him for a long time. Ultimately got to it, and then we acquired it. And that's kind of when we started to reconnect again, because when we bought it, we still were running Thrive Mortgage, our broker business, and A Better Way was I think larger than Origin at the time when we acquired it.
It was,
and it was like, holy smokes, I don't think we're going to be able to do this, meaning run both the broker business and the brokerage. So we made the decision very early on that we're going to have to choose A Better Way. And we spent a lot of money on it, and it was what we wanted to do. So we made that decision, but it was very tough because, we made good money with Thrive. But the one thing I wanted to bring up around this was the conversations that you and I had, where it's like, okay, we have Thrive, you have Green, they're basically underwriting models in a sense. Like we had a team of elite processors. We were the ones making it rain and going and getting the business, but our team was really the ones that were the shining jewel that were making it happen. And then we had we were building an underwriting department at A Better Way to be able to support agents and build the system that they could plug into. You had already built that at Origin. You were running your business with Green Mortgage. I was like, we basically have 4 underwriting departments between us. Is there a way where we could work together? And that's when we first started talking. Like really, right when we first bought A Better Way was when these conversations started to happen. And so that's really where this kind of is going to come full circle. Like we've been talking about this for years now.
Yeah. It's been a long journey, because you're like, what are we going to do with Thrive? Like there's so many conversations about that. And also just even internally, Green Mortgage and then my underwriting center Expressway, it was even like different logins, like I'd have to log in here or log in there. So even my underwriting manager, Tasha, has to like log into each one and check on the deals and stuff. So you and I were like, we need to unify this. The business is becoming a scale business in every single capacity, every way. The new MSA is like 100% accelerating that in a really big way. Yeah. But like even a few years ago, before we even knew MSA was coming out, we already kind of knew that this was the way to go. And we started talking about unifying underwriting centers. Our systems and processes were so similar. Our people, like we kept hiring people from each other.
Yeah, that's true.
It's so incestuous, right? Like it's just the same people. Like, oh yeah, your underwriting manager was mine, and he used to work for you before that. And then, now your compliance officer was my compliance officer. That's when he got into compliance, working for me. And like, my underwriting manager now is, had cut her teeth working for you guys back when you guys were the. And
it makes sense why I think it makes sense why the staff went back and forth, because the systems were so similar. And when. Yeah, and that we talk about this in the perfect loan process, like you attract good talent when you have a system and a process. And so they naturally went to the next thing that was an actual plug-in process, because most underwriters or staff go to another broker with nothing. And they're like, I'd rather take less money and just work for a proper organization with a system, right?
Honestly, That is so underrated.
Yeah.
Because the number of times that I have people that are comparing starting to work for us or not, or trying to get my team or getting poached from other brokers that are like up and coming, doing 50 million a year, 60 million a year. And like the question they ask, like, what's their process? And they don't really have an answer to that. And if they've ever worked with a broker that did not have a process, no process equals chaos. Like absolute
100%.
chaos. You're doing 50 million a year with a broker and one underwriter, and you have no system. Like it is just fly by the seat of your pants. Oh my God, I forgot to do this. Oh my God, we got to do this really quickly. And we got to do this. And a lot of the time it becomes like the team feel like they're getting micromanaged like crazy in those environments.
Yeah.
And they hate that. They honestly, like good people are just like, tell me what is expected of me. Let me do it. And then if I need you, I'll call you. Right.
Yeah.
And
own their lane, right?
Yeah, right. Like give them ownership of that and accountability. That's actually one of our core values at our company is accountability. And we just create a system where accountability rolls through, right?
Yeah. So, I mean, that's really it. So like, we just touched on like where this started, where it came and our parallel paths. And when you jumped into Origin and, we just talked about Expressway, which I want to get into now. Was Expressway a thing, or was that's one of your additions?
They used to have an underwriting center, and then I brought it back.
Okay.
Yeah, so they kind of got out of it. They used to call it the op center, and some brokers like, I used to really like it. Functionally, it operated differently than my version of it. I really wanted to replicate the green mortgage way of doing it because it's just easier and simpler if you have the same system across both.
Totally.
But also, almost all of the underwriting centers operate in a way where, hey, go do your pre-approval, and then when it goes live, let us know, and then we'll send it in, get the approval, and do all this stuff. But like the problem with that is that the brokers are, if we talk about like what is your role in the process, now brokers like, okay, so you are collecting documents and you're underwriting a pre-approval, and then when it goes live, then you don't do those things, and like doesn't make sense to me. So
you've already kind of done the heavy lifting in a sense.
Yeah, exactly, and also, how do you ever like have a vacation when you're expected, like you just don't do any pre-approvals when you're on vacation, I guess, right? Like, and so you have realtors like, hey, where's this client at? Where's this client at? And you're like, well, I'm trying to have a vacation, and it doesn't make sense. So my vision was always document manager is collecting the application, collecting the documents, and importantly, following up for all these things. When brokers are too busy, they don't follow up for the documents, and those clients just float away and disappear, right? You have an underwriter that's keep pushing your live deals while you're gone on vacation, and your role as the broker is like initial phone call and then telling them what they qualify for, and then just touching base through the rest of the process. And our underwriting team can step in and update the broker's clients if they're on vacation. Like, hey, I'm going to be gone. Okay, no problem. I'll just give the client the updates directly, right?
Yeah.
Like, it's just, there's an actual team. So our model, of course, is a bit more expensive because we're underwriting deals that don't fund, right? Like 50% of those pre-approvals don't actually fund. So you have to charge a bit more for that process. But it's the same process every deal, not like this one's live, so they're going to do this, and this one's pre-approval, so they're going to do that. Like, doesn't make sense. How do you have a system that's repeatable and operates the same way every time when it's different?
And like you're not an underwriting center, you're a processing unit. You're like literally offering the full business model. Yeah. It's really like a broker in a box in a sense.
Yeah, exactly. Yeah, that whole process, the whole system, every stage is dialed into like exactly what is expected of everybody at each stage, who's accountable for getting it past that stage, what activities trigger, what automation goes to the customer, what automation goes to the realtor, what email campaigns are going to the client, all that kind of stuff is dialed in, right?
So when you look at that now, especially today with more complex files than ever, that's the extra value add as well. I just want to touch on like a broker or maybe a newer to industry broker or a banker transitioning from one bank for 20 years, only knows their policies and how they get deals done there. That's kind of the next layer of value here. And I think when you look at underwriting centers across the country, to be honest, most of them, all of them have failed or are not a good solution because of the broken pieces of the process that you just explained, or like the value of like, can they actually get the deal done? Do you actually trust them as a broker that, that significant piece of the process to get your commission check is in their hands?
Yep. And it's tough. And the underwriting team isn't perfect. And some of the things that we have is also middle management, right? There's escalation process, or it's like, hey, underwriter presents the options. And if the broker's like, I just want a second opinion or a second set of eyes, no harm, no foul. Like, we do it internally all the time. My underwriting manager then takes another look at it. And something she's like, Kyle, can you take a look at this file? Like, there's a multiple points of like, let's just get another set of eyes on this really complicated deal, see if there's something we're missing here, right? And it just kind of automatically flows through that chain without even needing the broker to do it. And the reality is, you have an underwriting team that has done underwriting for some of the most complex deals in the whole country, looking at your deals that are in general much more simple on average than the typical green mortgage deal. But they have the experience of doing all those complex deals, you know?
And as a broker, like, especially somebody that's newer or a banker, the confidence that you would have going into a client conversation or a referral partner conversation that you're trying to harness a new relationship, what have you, that's significant confidence that you're armed with. And I think that's like the key, is not just how much time have you eliminated to be able to go do more of that business development stuff, because you have this team now processing your deals, but you actually have the best team doing it. Yeah. So you have the confidence to really excel in those business development type situations.
Yeah. And as a broker, when you're that mid-tier, you're not the one hiring, training. I mean, my training when I hired my first, second, third people, whatever, it was always like, okay, so here's the Word document from the last person I trained. We're going to go through, we don't do it that way anymore, so let's change that and change that. And I'm basically telling them, you're creating the Word document for the next person I hire. That was our training. That's terrible.
Yeah.
But that's the way that 90+% of brokers train.
If that even.
Yeah.
Right.
Yeah.
So, kind of moving into like the announcement and where we're at, it's probably pretty obvious for listeners at this point, but this is where we're finally able to come together and come to a conclusion on a path forward together. And, this is essentially where we're at. We're merging Origin with a Better Way Mortgage Group. And the primary reason is really we bring different value to the table, and we realized that we were really good at building our team and our business when we were running Thrive. We had the same intentions to build out the underwriting model. We found it very difficult because we were no longer running Thrive anymore. And there is a lot of staff sharing and different, resources that go back and forth. And so when we lost that, it made it very challenging for us to build out, the same model from the ground up again. Plus, the reality is what we want to charge for the processing support is usually too expensive for the broker on the other end. And we had no other option but to charge what we needed to charge to actually be able to hire these people. And so that's the paradox for most of these underwriting models, is they usually have inferior people because they're not charging enough, or they're not doing enough parts of the file to be able to actually charge what they need to charge, right? And it's back to the choppy process. So we came together, and essentially Expressway will be the A Better Way Mortgage Group's underwriting model unit. It's going to be built, far more aggressively than it has been in the past, because now we have more resources for more brokers to utilize it with the two coming together. So that was a big angle for us. And, just on that piece alone, like, how do you feel about that? Is that aligned with kind of where?
I feel awesome. I'm not just saying that because you're sitting right here, to be honest. I want to unpack a little bit about what kind of goes into that kind of decision making, because Origin was close to $1 billion a year in funded volume. We weren't small, but I feel like what's been happening with the MSA and all these other changes, we've had the AML, FinTrack, and MSA, compression in mortgage spreads overall, like more compliance requirements, like you name it. What we've been finding as brokerages is that I know a lot of brokers are getting squeezed, but the squeeze then comes to the brokerage too, and brokerages have a lot more overhead, right? So the problem is this isn't a key thing that I think, going from like running your own but like your own business and being a broker with like maybe one staff member. If you operate a large scale business and let's say that you make $2.5 million of revenue with a $2 million expense line item, like if your revenue goes down, by 20%, you go from making 500 grand a year to making zero.
Yeah.
When you're a new broker or getting up there and you're making, 300 grand in a year, and then your revenue goes down 20%, you make 240 grand. You still make a profit. It's very different when you're running a business with a smaller margin, right? And that's a big key difference to understand. So what happens as a brokerage, you have higher costs. You have brokers saying, hey, I'm making less money, so I need to negotiate a split. And they have time to do that now because they're not doing as many deals. So you get kind of squeezed in the middle. And to be honest, like we had so many conversations, and really where we kind of left off that underwriting union a couple of years ago was the only way we can do it is if we combine underwriting centers, then like where does the volume go? And that's kind of where things at the time kind of fell off the rails. Like, well, if I'm underwriting the deals and it has to, for compliance reasons, has to go into Origin, and you guys aren't going to want just like all of that volume to like leave a better way. And then we were like, well, we're not really ready to merge in this. We're just like, okay, I think we know where this would have to take us to do it, but we kind of had to separate and like, okay, maybe now is not the time.
Yeah.
But we ended up kind of circling back to it because I still believe, I believe firmly that the underwriting center model is going to be a much more significant way of the future. Yeah. Because with AI and all these things, ultimately AI serves people that have the time and resources to invest into it better. And an underwriting center funding $1 billion a year in mortgage volume is going to have the resources to pour into making those efficiencies much better. A broker doing $30 million a year doesn't have the resources to spend time doing that.
Totally. And AI only works with a process, a human process that's systematized and the same every way. And AI will and is a big component of everything we're doing right now. Where I would say both of us are much farther ahead from a tech perspective than most in the industry. And, with the power of the partners within Newton and everything that we have at our disposal, that will be a big component of the future of not just the underwriting model or the processing model, but everything going on in the brokerage. But I'd say when you look at like the cost of running a brokerage, like the compliance side of things became a huge focus with FinTrack 18 months ago. We spent a ton of time and money and resources into developing that. And, back to my earlier comment, when we decided to actually get into running a brokerage and recruiting brokers, was a volume issue. And that volume target just keeps going further and further out.
Up and up and up.
Yeah.
Right.
And it's becoming challenging even for $1 billion shop to maintain status and access to every single lender. And so the consolidation side of things is just essentially what we've done here. And we're seeing a lot more of that within, much smaller franchises. Like if you're a smaller franchise under that $500 million mark, like there really isn't much other paths here than finding another group to consolidate with.
I agree. I think we might be one of the bigger, earlier movers, but I absolutely see us being in the early side of this trend. There's going to be even more consolidation coming down the pipeline. So I think this is, we're going to see a lot more of this.
Totally.
Frankly.
And what it really does is it solidifies the future for our agents to know that they're going to be protected with the absolute best compliance support in the industry, because we have the resources to continue to grow it and make sure we're on top of it. Our brokers are always going to have the very best lender access from the highest tier, the most amount of compensation possible, and access to every lender that is in our channel. And that is our goal. Like, that's something we pride ourselves on, is lender access. And it's like, whether it's whatever lender it is, if they're in the channel, we have them and we have the top tier status, and we make a point of supporting all of our lender partners because they're so important. And that's only going to help us with the consolidation. That's only going to help you and your team. And our brokers are ultimately going to benefit from all these angles. But back to Expressway, and now Expressway can benefit from all of that as well, and benefit from more volume, benefit from better tech, better support, better systems, because we have the volume to support it. And the brokers, to your point, are more and more going to need that type of support. And I'm really looking forward to, from a Better Way perspective, our brokers having the ability to access this.
Yeah. I'm very excited. And you know what, it comes like, again, circling back to like the decision to do this, I think it's really important to like focus on what you do best. And I've really, as the profitability of Origin has become more and more challenging in the last couple of years. I mean, I bought it January 2022. That was literally like the peak of the mountain, and it just slowly started to turn right at that moment, right? But if I really look at like, what am I truly the best at? You've referenced it to like, I think that underwriting and getting deals done, and so underwriting, systems, training, just getting deals done and having a system and process for doing so is really what like my highest and best use is, my value proposition. And interestingly, we both bought brokerages and we kind of went in different directions. You got out of the deal making side, which allows you to better recruit. Because I find it's like you can really, you try to do both, but when you're chained to the desk working 10 to 12 hours a day getting deals done, I'm not out there following up with brokers, say, hey, you should join Origin, let's have coffee, let's have lunch, all that kind of stuff. Like you were probably able to do that even with Thrive a little bit because you had Derek, who's more of like the underwriting, get the deals done side, and you're more like the go out there and meet people. So the partnership kind of made sense. But that's also where I kind of looked at it and said, well, my growth strategy should be mostly on the back of like the underwriting center and the training, but then you also have to market it and get people to know about it, and that also is like another job. So it's like, do I just run this and then get somebody to pay somebody to like recruit to bring in brokers into the ecosystem? Because really, my best purpose is probably to be getting the deals done, right? And so that's where really looking at what you guys do really well. You guys are ridiculously awesome at getting in front of brokers and the recruiting side and like telling people about the reasons to join a better way. And what I'm really good at is I'm still doing deals and I'm like really good at that. And so we look at it like, well, you guys can bring more people into a better way, which grows it more, which then provides more value because now we have more lender access, we have more volume to go back to lenders to get better things, etc. But you guys can recruit more if you have a landing center. You say, we have an awesome training system and we have an awesome underwriting system, and that's used to pull more people in. And for me, I can just do what I do best, which is running these two things without having to also find brokers to tell them all about it to bring them into the fold. I just do the very best at running those two.
Totally. And just to put a bow on like the consolidation side of things, and for broker owners like listening to this, like the ability to not have the same staff member doing the same thing because they can do so much more with the capacity, because now we're together. We have, we're either repurposing people for things that they're better at, their genius zone. Like you just mentioned, your genius zone is clearly getting these deals done and focusing on what you love to do. But that goes right down the whole company line of people being repurposed, people being, able to do what they're really good at, opposed to wearing 6-7 different hats within the company. And I mean, you mentioned training, like, that's a good segue there. Like that's been a big focus for us is training and constant support when it comes to education around everything to do with the business. Our focus has largely been around getting our team in front of, strategies when it comes to growing their business, strategies around building a process and implementing a process and a system. The constant support from lenders and educational events, live events. Educational events have been a focus for our culture. And, that's one thing that, we get to share now with the Origin brokers and start to, build that collective culture together. And the one thing I just wanted to say before rolling into the training side of things is, like, if you're an Origin broker, like, nothing breaks here. Like, you're only going to get more. And if you're in a Better Way broker, like, nothing changes here. You're only going to get more access to somebody like yourself from a resource perspective with the education and the content that you have, but also the expressway opportunity and the ability to tap into a fantastic system and really, double, triple your business if that's what you want to do. Yep. So I just wanted to put a bow on that. And, the training side of things, which is, again, big focus for us, you take that to a whole nother tier because of the focus and the content that you're building. And that's going to be one of the pillars that you're focused on going forward. Maybe we can just chat about that.
Yep. I think I talked about it earlier, but making sure that you're learning the right things at the right time and having a approach where you're getting access to the information when you need it. And I believe that by having access to this as course material quizzes, testing, like actually creating like courses for this. This is not just watch the video and then you know how to do it. Like we're literally doing it so that, okay, we're teaching you now, if you're a new broker, this is how to calculate rental income. So go back into your Velocity application, and now we're going to show you add in and add to income, and look at what happens at 50% add to income, 85%, a rental offset. What does that do to the numbers? And then test people on like making sure like, okay, so once you have your file built this way, what result do you have? What's your TDS? And then it's like, if you're incorrect, it's like, no, you're wrong. Go back and fix it.
Yeah.
Like there's something wrong here. And like having really structured system, like a systematic approach to training, it doesn't exist. And like everybody is clamoring for it.
Yeah.
You know?
Well, it's crazy. It's like, I mean, Dustin Woodhouse brings this up all the time when we chat about this type of stuff. It's like you spend $10,000-$12,000 to go, or probably even more than that, to go become a hairdresser.
Yeah.
But you know, $1,000 in a cell phone and you become a mortgage broker with a course that teaches you nothing about mortgage brokering.
Yeah.
It's pretty crazy to think about. And so really we're, you know, the conversation, this is going to be your baby in a sense. Like the way you've explained it to me, like it's like the yellow brick road to building a proper business in this industry. And it's really built upon like a university type feel.
Yeah. Yeah. And bring it down into the modules that you need to know when you need to know it. And every course is like, what's the category? Is it underwriting, or is it sales, or is it, you know, systems or marketing, et cetera? And then is it a 101 course, a 201 course, et cetera? Because all of these things is making sure that we isolate the information to be learned when you need to actually learn it. So you're not going in and doing 301 level courses on like how to read financial statements so you can do corporate net income for clients with 12 rental properties when you're 10 days into the industry.
Yeah.
Like, why are you knowing how to do that? You just need to know how to turn a person into a lead. That's all you need to do. So then it's like, okay, what are the elevator pitches when you meet somebody that's a first-time home buyer? What's your value proposition? Somebody who's self-employed, value proposition. What is all that? And then creating a system where you just plug them into the system and then tag them as, okay, this person I met is a self-employed first-time home buyer. And then boom, they get email campaigns sending out to them so that then there's constant information and communication going to that customer that's relevant for them. And then you just meet as many people as you can, have your elevator pitch based on this information, deliver the value proposition, put them into the campaign, and go meet another person. So you're turning people into leads, right? And then after you're starting to get that, now you have leads that want to know more and take the next step to an application. So now you have to convert a lead to an application. How do you do that intake or discovery call next, right? That's the next thing you need to know. And then, okay, great, I've done that now. Now I have an application. What documents do I need? Okay, so now we need to go from application to fully documented, right? And then once you get the documents in, now how do I underwrite the file? But like, why are we learning how to underwrite when you're 5 days into the business, when you might need to know some of the basics to know how to communicate with clients to turn people into leads, but you don't need to know the complex ones, because you can just tell them, hey, there's lots of different options, 40 different lenders. Really what we should be doing is collecting your information, and then once I have it, then I can figure out your options. And guess what happens? You have a underwriting center and a training center that is insulating you so that, okay, great. If you can turn people into leads and then leads into applications, we can do the rest. Okay, Now here are the documents you need. Here are the options for that client. Here's this, here's that. But you know what we can't help? We cannot help you and force you to turn people into leads. That is like, if you can do that part of the business, you can be a successful broker with the insulation around you to help you.
Yeah, it's really how Expressway reinforces the coaching. You
have to combine them. That's the key. And that's where like you have to kind of have both. And that's why we're doing this, where I'm doing both, because the training has to have an insulated approach where, okay, now you're like, now what documents do I need? And you have a document manager you just talk to, and they train you and they go through it. And the system automates a lot of this kind of stuff. But like, why do we need these documents? So the client's asking like, what do we need? Why do I need them? Like, you should know these things, right?
And what better way to learn how to build your own system and operation? Like if you aspire to be, building like the Green Mortgage team or Thrive Mortgage, like you want that operation, why not work inside of it and get paid to do it? Like, I've talked to so many mentors, and I think about this all the time. If I was going to go into a new industry, I'd go work for the best guy for free.
Yeah.
Like, and you get paid and you get to build your own business, build your own personal brand, all while having the most elite system behind you and to experience like that's a huge opportunity for folks that are looking to get into this industry or bankers looking to transition.
100%. Yeah.
So, moving on and looking to wrap, like looking to land the plane, quote unquote. I'll take that from Jeff Willis. He loves that term, and it goes hand in hand with him being one of the former owners of Origin. But looking to land the plane here, what do you see? What are you most excited about for the next 12 months?
I mean, I think we're at this precipice in the mortgage industry where the business has gotten a lot harder right before we've got all these tools and systems and processes to make us more efficient. And so in the very near future, I think AI is going to make our lives a lot easier. Documentation, review, and automation, and all of these other things that will make it easier for us. And effectively, we've seen our costs go up and our revenue has gone down as agents, brokerages across the spectrum, lenders, I'm sure, are feeling it too. But then we're right around the corner. I think we're also going to see a decrease in cost because we're going to have all these efficiencies that are just a little too early. The bank statement verification is just like not quite there yet. And all these AI tools and stuff are just not quite there yet where they've actually created significant efficiencies in our lives. But it's around the corner. And I think that like it's exciting for me to be able to focus my energies and efforts. And it's interesting as a broker owner, you end up getting pulled in a lot of different directions. You guys know this, right? And trying to do deals at the same time. And like, that's really what I'm really good at. And now I just get to like really narrow my focus and just be like training an underwriting center and just run it. Like I'm folding in Green Mortgage into my underwriting center. It's going to get treated like a client or a broker of the underwriting center. And that's a key for me because I do want to unwind and get out of doing deals. You guys did it for a reason.
Yeah.
I'm doing it for a reason too, because I believe that I want to build a machine that has enterprise value. It does not require me to run and be successful. And I think that I don't know. I feel in my heart that this has been a long time coming to like make this shift and move, right?
Yeah.
And I had to go down the journey of running a brokerage and doing that, and of my mission and vision always was to do underwriting center and do the training and everything. And now it's all just happening in a way where I know that I'm not going to build it and then also have to get the people to come.
Yeah.
We're going to make it work together.
Totally.
Yeah.
Yeah, and I think like for us, it's just Derek and I always did a really good job building our business because we did what we were really good at in our own respects, and Jason added a huge element to that when we bought A Better Way, and to me, I just look at it as another pillar of somebody bringing expertise that we're not the best at, and that's just complementing what we have in front of us. So I'm just super excited for an opportunity in this industry that nobody else has. We literally have every pillar that can support every broker in the best absolute way possible. And that's super exciting for me to be able to, now unleash that and provide that value. Also working, getting to work closely with like a friend in yourself, like that's just a very exciting piece of this as well. And yeah, I just think we're on the cusp of something pretty massive, and just the ability to really make a difference is pretty cool.
I'm looking forward to the partnership. I think you're always looking for, if you're hiring people, you're hiring for your weaknesses, not for your strengths. And it's not like either of us are weak. You guys are great at doing deals too.
Yeah.
And it's not like I'm terrible at recruiting. It's just like, what are we spending our time doing?
Totally.
And it's just aligning that together. And I have partners that I've never had before, and I'm just super excited to like bounce stuff off of you guys. We always go down rabbit holes on
totally.
like, oh man, this and this is a great idea and that. But like, I'm really looking forward to it. It's gonna be fun.
The Zoom meetings are always have an extra half an hour of
literally, we book it with like a 45 minute an hour, but you and I both do the same thing. We always block off that extra half after, right?
Exactly. Well, so for listeners that are, not with A Better Way Mortgage Group or Origin, how can they get a hold of Kyle? We'll make sure all the contact information is in the show notes, and, feel free to reach out. I'd say, Kyle's probably one of the most approachable people in the industry, happy to take anyone's call and flush out any details or questions you might have about a very challenging deal, or, just looking to learn more about Expressway and everything that we're doing here, the training program. All of this is going to be very much available everywhere you find us for the foreseeable future. We'll have future episodes with Kyle, and maybe we'll put him and Justin Noda back in the chairs to do some legacy episodes of Mortgages A. We didn't actually touch on that, but we'll definitely regroup on a lot of that kind of cool stuff, and probably more to come too from a podcast educational component for Kyle, and bringing back a lot of educational content that we're talking about today. So looking forward to that. And for everyone that was listening this long, thanks for listening, and on to the next one. Thank you for tuning in. If you found value in this show, please subscribe to our channel on your preferred platform. We're available on Spotify, Apple Podcasts, and YouTube. Your support is incredibly appreciated. We also welcome your reviews and feedback, which are crucial in helping us deliver outstanding educational content. Feel free to share your thoughts. A 5-star review would be fantastic if you think we earned it. Now, a message about something that means a great deal to us and to everyone at A Better Way Mortgage Group. City Reach Care Society is our chosen charity partner for 2026. For over 20 years, City Reach has been serving thousands of vulnerable individuals, children, and families across Greater Vancouver. They call themselves the Hope Business. When you see what they do, you'll understand why. Through their Food for Families program, City Reach provides fresh, nutritious groceries to over 4,500 people every single month. They partner with 54 schools across Vancouver, Surrey, and the Tri-Cities to make sure kids have access to food, hygiene supplies, and the support they need to thrive. Every August, their Back to School Blast puts backpacks filled with school supplies into the hands of 1,000 children heading back to the classroom. Here's what makes your support go even further. Every single dollar donated to City Reach translates into $10 worth of food for families in need. You can learn more, donate, or sign up to volunteer at cityreach.org. That's CITYREACH.org. Once again, thank you for listening, and we'll see you on the next one.